Hello, friends. Welcome to the end of week wrap up. There's a ton of data, but unlike normal, we're not going to hit all the highlights of those things. Matter of fact, we're going to kind of skim over them, not for any other reason than I got some other cool things I want to talk about. A few things surprised me this week. So we're going to dive into like maybe 1 or 2 points, but I'll still list it so you guys can see it in case some of you are nerds and really want to know the data. I will share it with you so that you have it. But let's jump in. So because I'm in the mortgage business, we got to talk rates. Rates this week improved slightly, so that's good. It looks like a big improvement. It really does. Here on the mortgage-backed securities, you're like, neat. But we're hitting a resistance level. You guys can kind of see it where yesterday and even today, we kind of tried to break above it, just couldn't. That may mean rates may drift a little higher, but that's where we are today. Per Mortgage News Daily, the 30-year right now, 7.6, slight improvement. So basically still that mid to high 7 range for your 30-year fixed rates. We're starting to see some folks, arms, they're still not like the 10-1 arm maybe, but even these arms, like it's hard to find that. Like that's where they should be. I get it. But the short term where the Fed's pushing up the short-term rates, that's making it tough. Here's some good news. The projected, not finalized, but the projected new loan limit is going to be 750 grand. So that's up from 726,200. So let's just use round numbers, about a $25,000 increase to make it a loan where you can get a loan at 750 grand and avoid jumbo financing. 750,001, you're jumbo. But here, you're good. So we officially starting this week are accepting new rates or new locks rather. For anybody getting a $750,000 loan right now, they can go under the conforming loan, even though it's not official for next year, because we love you so much and we're so freaking good at what we do and we're so big. We're going to go ahead and start allowing loans to lock at 750 and close even before the loan limits become official. So there you go. That's awesome. Here's some tax brackets. Just throwing those up there because I was curious about them. So if you want to look. I'm not going to dwell on it, but there you go. CPI. The CPI is the big one that measures inflation. Just came out. So basically, guys, it was about where expected, but a little higher in some areas. And the big one is this. Look down below, the last thing we can say. So month over month, 0.4%. The core, which strips out food and energy, was 0.3. So you guys can say that we're still in that, like, depending on which one you want to look at, but let's look at the 3.7%. So the headline number says inflation's now at 3.7. The Fed wants 2%. That's their target. That's what they're going for. But check it out. The lodging away from home, meaning hotels, 3.7. Look at the month over month change above. Everything's 0.4, 0.3, 0.6, 0.5, 0.6, and then 3.7 smacks you in the face. And so I think, and down at the bottom, you can kind of see the little EKG looking thing. Look how unstable. That's the housing away from home, lodging away from home. And you can see how just unpredictable that thing is. 1 month it hurts you big, the next month it helps you big. So 3.7 is big. I don't know. This is Mark Pfeiffer's now opinion. I've seen things where like New York has started banning Airbnbs. So for that reason, hotels can now charge more than what they once were. I know other states and other cities are talking about that as well. So maybe that has something to play with it. But basically, that number just kind of made it to where inflation stayed relatively steady where it could have, should have gone down. I know I'm a broken record guy. Shelter costs. Why is this important? Check the upper left. Shelter's 43% of the CPI. So including that was the number we just saw was the lodging, lodging away from home, but 43%. And the shelter cost, look how much of it lags. So you can see the blue where we are, today, 3.1% in inflation, whereas the number they actually use is like an average. It's actually showing 7.2. They're using the 7.2. So if they were to take the real-time effect, like here's where we are, look where inflation would be, guys. The real inflation should be 2.3% right now, not the 3.7 we just saw. So let me say that again. The Fed wants 2%. We technically real time are sitting around 2.3%. So we should be there. And as we've said, as you can see this yellow line, it's going to keep coming down because of where current rates are, or not rates, but inflation numbers for shelter. So again, the Fed does not need to raise rates anymore. We've been saying that for a long time. So whether they do or don't, to be determined. But here's one more thing that blew me away. So the second line, MV insurance. This is motor vehicles. Guys, up 19% year over year. And a big part of that apparently is because of like motor theft vehicles are like an 18-year high, which is crazy, right? I think it was 18, like 15 to 20, somewhere in that range. But people are stealing way more cars. And I guess it makes sense with affordability issues. But guys, here's the thing. The insurance, there's, hail, that's one, auto theft. Like the Fed can't control those things. So the energy and the gas, as we talked about, it does get stripped out. But you guys can see what percentage of all this stuff, the Fed can't grow more wheat, right? A lot of that's just due to Ukraine being a huge supplier of wheat to the world, and they're obviously not being on at full production. So all those things suggest that inflation can and should be coming down, with the exception of a few weird things that are just going to keep coming up. This one sadly blew me away. 84% of people in a survey done by Fannie Mae, 84% of people say that they don't think it's a good time to purchase. And unlike, this is the first time in history, all the past answers, it's now rates are number one reason. It used to be, oh, it's more expensive, but it's now rate was the number one reason why people said now is not a good time to buy. So just remember, guys, if you're watching this and you're a consumer, if you're a real estate professional, if you're a builder, rates are not forever. If somebody buys a home today, you can eventually refinance when rates go down. So we keep saying that because, again, house prices go up. I know I'm a broken record. Look, thoughts and prayers obviously go out to all over the world, Ukraine, even the good folks of Russia that don't want to be there, that are fighting it. I understand that. Now Israel, obviously this is a more than centuries. This is millennia things that go on there, but it's not good. But I will say, because of this, the Fed has come out and said they may not need to raise interest rates. They feel like somehow, some way, this is going to impact inflation and just the world economies. And so there you go. And down below, there's a QR code if you want to donate to help out over there. Please do. We're going to skip over this. Job reports, basically, guys, they're just, I think there's an underlying fundamental issue in the jobs. The headlines aren't showing it. So here's some numbers if you care. You guys can read them if you want. It just kind of gives you where the real jobs were. And again, those aren't massive improvements. So lastly, we all know homes got more expensive. I saw the stat says it, rose basically about $1,400 to $2,000. So call it a 600-ish, rise in average payment, which is a 46% increase. That is very expensive. No question. We've talked about it. Rates are obviously the reason. This blew me away. I don't remember the exact stat because it's been a few days since I saw this article. But basically, guys, Google pays Apple a boatload of money to make Google available on the Apple devices and make Google like the default search engine. So they was literally, and if you find the article and I'm wrong, but I want to say it was like a third of Apple's revenue. Like a third of what Apple makes is Google just paying them to say, let me be there, which is nuts. That's just wild to me. So there you go. And this is stock and how it's done. Alphabet is Google, for those that don't know. Google's been crushing it. Good for them. Lastly, student loan stuff. Man, there's a whole thing. I didn't get in time to put it in here, but the national deficit is embarrassingly big. I think it's like 1.7 billion, and all the student loan forgiveness, all this stuff's not going to help. Texas cities, this is the other one that I thought was surprising. We are killing, not in a good way, we're killing New York and San Francisco. 25% of office space in Dallas wasn't leased in the third quarter. In New York, it's 12%. In San Francisco, it's 17%. That blew me away. Those big cities, because I don't want to live in either one of those places, but their office space has less vacancy. More people are renting it and going to the office, apparently. Who freaking knew? So those are just interesting charts. As always, guys, please get social, share, subscribe. We love that. Give us some thumbs up, all that fun stuff that you need to do. As always, thanks for watching. Hope you guys have a great rest of your week and have a great weekend. Bye-bye.